Hey everybody, Rachel Micallef here from Empire Tax Professionals. I'm the CEO of Empire Tax Professionals, and I am also a licensed enrolled agent. I'm licensed by the IRS, and I'm able to help any business or individual all over 50 states. Today, I would like to discuss with you the key tips to help businesses hiring their first employee. So key tip number one is workers' comp insurance. You want to make sure that you have the proper workers' comp insurance before hiring your first employee. New York State charges you $2,000 for not having workers' comp insurance for every 10 days. Now, every single state varies, and you want to know what the rules are in your state, but not having workers' comp insurance can cost you thousands of dollars. We had a client that she got a fine of $163,000 because she did not have workers' comp insurance. Luckily, we were able to reduce the fine from $163,000 to $2,125. But that may not be the case at all times. Have the proper insurances and make sure you speak to someone that can assist you with that. Key tip number two is collecting the proper documentation from your employee before they get hired. So you would need to collect their W-4 form and I-9 form, and you could just Google those forms and print it out and have them fill it out before they start working with you. Key tip number three is you want to make sure that you have the proper documentation so you can be protected, such as an offer letter, a NDA agreement or non-disclosure agreement, a non-compete form, a confidentiality agreement. These forms are not really required, but they are there to protect you and your business. If your business is all about, confidential information, and you want to make sure that your employees, when they leave or when they're out with their friends, they don't talk about the specific clients that you are working with. And you want to make sure that everything is kept confidential at all times. These forms will help you, and they will help you be protected. Key tip number four is know the difference between an employee and an independent contractor. An independent contractor works, outside of your facility. They don't work in your office, and you have really little or no control over them. They work for multiple businesses, and they don't only work for you. If they only work for you, they work in your facility, and you really control what they do and when they do it. They are supposed to be an employee. Department of Labor is auditing a ton of business owners right now, making sure that they're classifying their employees or their independent contractors correctly. So you need to make sure that you go through the specific tests to make sure that you're protected. If you are not, if the Department of Labor thinks that an independent contractor should really be an employee, they will go back to 3 years, make you file payroll returns for the past 3 years, and make you pay back taxes for the years that you never paid taxes for those independent contractors. The way you're able to protect yourself is paying the independent contractor to their business name. Because if they're really independent contractors, you should not be paying them to their individual name. They should either have an LLC or a corporation. That minimizes the risks of audit. So again, if you were to hire me, let's say, and you paid me, my name is Rachel Micallef, then you have a higher risk of being audited because the IRS would see a check made out to my name, and they're gonna assume that I'm an employee and start asking you specific questions to see if I am an employee or an independent contractor. But if you pay Empire Tax Professionals, if you pay, Virtual Solutions LLC or whatever, the risks of audit are so low because they're not gonna ask you for every single company that you paid. They're only gonna start questioning you to every single individual that you are paying. So know the difference and protect yourself from any Department of Labor audits, because that alone can cost you thousands of dollars. Key tip number five, if you have your employee, or if you do have employees, you really need to know the payroll tax deadlines. Payroll tax deadlines are April 30th, July 31st, October 31st, and January 31st. You need to know the dates. Payroll returns are due every single quarter and not every single year. And one last tip, if you are an S Corp, you are considered to be an employee of your own company. So that means that you need to start paying yourself a reasonable compensation. And reasonable varies. You really need to have an accountant to guide you, to tell you how much you should be paying yourself. And that really depends on the business that you are in, how much money is coming into the company, what are your sales, exactly what are you doing? Are you working a lot in the business? How many other employees are there, etc. It varies so much. And, we help business owners a lot on a daily basis and helping them on what their reasonable compensation should be. Because if you don't pay yourself a reasonable compensation, that really increases the risks of audit. And then what happens is the IRS will come up with a salary for you and make you go pay back taxes on the salary that you should have been paid for the past 3 years. So these tips are really important. They can save you at least $5,000 to $10,000 either in taxes or in fines. And if you ever need any help, just let us know. I can help you with bookkeeping, payroll, sales tax, corporate returns, individual returns, IRS notices, questions, audits, etc. from A to Z. We're licensed by the IRS. We can assist you with everything that you need. And just give us a call, 212-300-5776. Thank you so much and have a great day.